G'day everyone, welcome back to Pete's Investing. It's February 15, 2024. This is a US dollar analysis. Just be mindful we're in a somewhat bullish trend, although there is a divergence working out, and we've also hit a minor resistance. So first off, we've got the weekly, daily and hourly, and on the weekly first, our ADX 25 indicator is showing a bullish movement. The CCI 400, which supports the trend, is showing somewhat neutral movement at the moment. You can see the price is pretty much in this band, but it's actually approaching and possibly breaking to the upside of that moving average. The CCI 150 is our divergence indicator, and it's currently showing no sign of a divergence at the moment. It's moving in line with the price. On the daily, the ADX is bullish, the CCI 400 is also bullish, and you can see there the CCI 150 is also moving in line with the price. We had a little bearish divergence with that little double top and as higher price on the higher highs on the price, double top on the CCI 150, and the price eventually collapsed after that, hitting our target area. Now what I've got here is a Fibonacci range between that low and high, and that's a 61% level. And as I always say, when the 61% level is breached, that generally means a continuation of this reversal. So if we were going short previously here, we're still effectively possibly going to bounce off that 61%. One of two scenarios: bounce to the downside and continue a downward momentum, or if it breaks above that, we're going to have a pretty stronger outlook for the US dollar. So at the moment, that 61% is also our minus resistance level at 10,462. On the daily, on the hourly, we've also got on the ADX, we've got a bearish trend, if you like, broken to a bearish trend. The CCI 400 is also broken below its moving average, so showing a potential downward trend. And we do have this double top on the CCI 150 versus higher highs on the price. Again, it's hit that resistance, so we may see a retrace to the downside. So, and I do mark these resistance targets with these little rectangles where they've been hit. So most of the time they do work, but occasionally they fail. And for it to fail, we need to see the CCI break higher than that point there, in which case we'll see the price also break beyond this resistance and invalidate the divergence. But at the moment, this divergence is still in play, and it's just sitting on the fence at the moment, potentially going one of two ways: either going to retrace and possibly even collapse, or break higher than that resistance. Bit of an outlook for the US dollar, the strengthening factors. So the Federal Reserve continued interest rate hikes in the US compared to slower increases in Europe make the US dollar a more attractive investment. Safe haven appeal. In times of global uncertainty, investors often seek the stability of the US dollar, boosting its demand. US economic performance, relative resilience of the US economy compared to some other major economies supports the US dollar. And weakening factors, rising inflation, high inflation in the US could erode the purchasing power of the US dollar, potentially dampening its appeal. Potential economic slowdown, concerns about a recession in the US could weaken the US dollar if economic data deteriorates. And global dollar flows, changes in trade patterns and capital flows can impact the demand for the US dollar. So again, just be mindful, we're in a bullish trend at the moment overall, although there is a bearish divergence currently in play. So be careful about going long on the US dollar. We may see a bit of a retrace at the very least, or possibly even a collapse. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and if you want to get more information, support us more on the Patreon page with this links in the description below. See you in the next video.